In today's show, crypto hedge fund manager predicts explosive parabolic move for Bitcoin and shares his timeline. That's right, Morgan Creek Digital Managing Partner Mark Yusko thinks the bottom is already in for Bitcoin and is due for a massive rally in less than a year. Quoting him here from a recent interview with Stansberry Research, I think crypto spring is here. We are still a ways from crypto summer when we get another parabolic move up, but that will come probably in 6 to 9 months. And Plan B updates us here. RSI buy signal in July, $23,300 close. Probably nothing. And fun fact, the Bitcoin network settled over $62 trillion worth of BTC in the last 12 months. Also in today's show, guess what's coming sooner? ETH devs move up the date for the merge. That's right, the Ethereum merge may be coming sooner than planned after core developers announce a tentative merge date of September 15th, which will see the blockchain transition to a proof of stake. And speaking of Ethereum, it's set to explode after this major update, according to BitMEX founder Arthur Hayes. I'll be sharing with you an interesting observation he shared about the current ETH futures term structure and his conclusion here. If you believe the merge is going to succeed, then this is yet another positive structural reason why ETH could gap higher into the end of the year. Also in today's show, BlackRock announces the launch of a new private spot, Bitcoin Trust, which many are calling the biggest news of the year. Quoting them here, despite the steep downturn in the digital asset market, we're still seeing substantial interest from some institutional clients in how to efficiently and cost effectively access these assets. Using our technology and product capabilities, Bitcoin is the oldest, largest, and most liquid digital asset, and is currently our client's primary subject of interest within the digital asset space. And quoting Barry Silbert, central banks now have an easy way to invest into Bitcoin. And quoting Coin Bureau, so let me get this straight, BlackRock is allowed to offer its clients spot Bitcoin exposure through a private fund, but the SEC won't approve a spot ETF for retail. I suppose retail investors are too clumsy to make adult decisions, not like those uber smart rich folks. Also in today's show, according to Invest Answers, BlackRock's entry into Bitcoin could shoot the price up to $773,000. That's right, if BlackRock invested just 5% of its assets into the king crypto, Bitcoin's price would reach $773,000 in the next 3 to 5 years pretty easily. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. We also do a $50 Bitcoin giveaway every single day. And the winner from yesterday's episode is, we have Joseph Goodwin. Congratulations. He commented the following: looking forward to $100,000 Bitcoin. Thanks for all your hard work. Congrats, bro. You just won $50 in Bitcoin. Please reply to this message with your Bitcoin address so I can send it to you. HODL. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below, and a random comment will be selected in tomorrow's episode as the winner. Best of luck. And today's show is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors. And did you know you can get up to $1,000 in Bitcoin when you buy, sell, or trade crypto with BlockFi using my referral link in the description right down below? That's because they've been an exclusive partner here of the show for the past couple of years, so they have this special offer for you. Another product I like to point out, did you know you can get a BlockFi loan and borrow money at rates as low as a 4.5% APR? That's right, you don't have to sell your crypto to get cash. At BlockFi, you can borrow funds against your crypto assets so you can get a loan while continuing to HODL. Why is this so cool? No credit checks, and you can receive the funds in as little as 24 to 48 hours, truly making this a no-brainer. So go ahead and use my referral link in the description right down below. Claim your bonus of up to $1,000 in Bitcoin, and let's get this crypto, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1015. Now, Morgan Creek Digital Managing Partner Mark Yusko thinks the bottom is already in for Bitcoin, and it's due for a massive rally in less than a year. That's right, in a new interview with Stansberry Research, Yusko tells host Matt McCall that after nearly 10 months of frustration and financial loss, the crypto winter is finally over, with Bitcoin ready to move in about half a year. Let me know if you agree or disagree that the crypto winter is likely over. Quoting him here, I think crypto spring is here. We are still a ways from crypto summer when we get another parabolic move up, but that will come probably in 6 to 9 months. Now, the crypto hedge fund executive looks beyond the fluctuating price charts to emphasize the importance of the blockchain as represented by the original crypto asset. Quoting him again here, Bitcoin is a perfect store of value. It's basically digital gold. Gold is the only money in the history of the world. Bitcoin is as good as gold. It's equally scarce, yet it's more divisible and more portable. I disagree. I believe Bitcoin is way more scarce than gold because they find new gold every single year. There can only ever be 21 million Bitcoin in circulation, and let's not forget the millions of Bitcoin lost and gone forever, making it even more scarce. Now, Yusko goes on to explain why he's not worried about the major losses Bitcoin has incurred since late in 2021, noting that he believes Bitcoin already hit a cycle bottom at around 17,500 back in the middle of June. As he shares here, everything's down since November because we had these massive liquidations of over-leveraged speculation. When you get a margin call, you don't get to sell what you want to sell. You've got to sell gold, bonds, and Bitcoin. The things that previously didn't go down now go down. So now everything's going down. Correlations go up, but that's a temporal thing. Now correlations are reversing again. And last Friday was a good example. Markets were down, Bitcoin was up. Bitcoin's up a lot since mid-June. That's when I say was the bottom, the $17,500 candle that day. We made a series of higher lows and higher highs. So there you have it. Let me know if you agree or disagree with Mark Yusko that the bottom is already in and we've already seen the worst when Bitcoin dumped all the way to 17,500. And to watch this interview with him with Stansberry Research entitled Breaking Down the Market, check the show notes below the video. In the description, and quoting Plan B, he updated us here, RSI, Relative Strength Index, buy signal on July 23,300 close. Probably nothing. And he also recently shared S&P 500, which you can see in the gray line, V-shaped bounce back. Is Bitcoin to follow? Let me know your thoughts in the comments below. Now for a fun fact, the Bitcoin network settled over $62 trillion worth of Bitcoin in the last 12 months. That's a pretty big deal. And before I break down next way of the day, guess what's coming sooner? ETH devs move up the date for the merge. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptos are currently correcting. And in the red, we got Bitcoin down about 4% for the day, trading at around $23,800. We have Ether down about 2.4%, trading at around $1,900, while Binance Coin, Solana, Polkadot, Avalanche, XRP, and Cardano all correcting and in the red. But all right, now let's break down our next story of the day. The Ethereum merge may be coming sooner than planned after core developers announced a tentative date of September 15th, which will see the blockchain transition to a proof of stake. The Ethereum mainnet merge date came into view after core developers such as Tim Bako and Prismatic Labs co-founder Terrence agreed in a Thursday developer call that it would when the total terminal difficulty hits this insane number. And this was confirmed in a GitHub post titled Tentative Mainnet TTD, which was committed by Bako on Thursday. And while the exact date and TTD could still be changed, the success of the various testnet merges could be a promising sign that the Ethereum mainnet will transition to proof of stake consensus next month without an issue. The new official schedule is at least 3 days earlier than Ethereum core developer Tim Bako's last prediction of September 19th, quoting Terrence.eth, tentative mainnet Bellatrix fork slot/time. It shows you the epoch at 144,896 and the time and date, September 6th, 2022 at 11:34 a.m. The lengthy number provided is referred to as the total terminal difficulty, that's the TTD, specifying the end of the proof of work and when proof of stake will begin. Now, total terminal difficulty is the total difficulty required for the final block that will be mined before the transition to proof of stake. Now, before the merge can be completed, the Bellatrix fork must be performed, which will implement the software needed for clients to run a consensus layer. This is scheduled to happen on September 6th, roughly 10 days before the merge. However, there are rumblings that Ether miners, many of whom rely on income generated from proof-of-work block rewards, will continue running their original proof-of-work version of Ethereum in order to maintain their earning potential. Bitcoin and Ethereum miner and crypto angel investor Chandler Gua, an obvious proponent of proof-of-work chains, is leading the charge for miners to fork the Ethereum network to create an Ethereum proof-of-work chain. He says he thinks that there is enough room in the industry for two types of Ethereum to exist and has retweeted a series of opinions supporting the notion. As he tweeted here, proof of work, proof of stake, both okay. And in this open letter to the Ethereum community, it says, he who fights too long against dragons becomes a dragon himself, and if you gaze too long into the abyss, The abyss will gaze into you. Now, this is a very detailed and long thread, all included in the show notes below the video and the description. So there you have it. Let me know if you're currently bullish on the merge and looking forward to that release. Let me know in the comments below. And speaking of the merge, next up, we're going to be discussing Ethereum set to explode after major update, according to the BitMEX founder, Arthur Hayes, and explains why. But first, let's take a quick look at the overall crypto market cap, sitting above $1.1 trillion with $77.5 billion in volume. In the past 24 hours, the current Bitcoin dominance back on the decline at 40% even, with the Ether dominance on the climb at 20.1%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Anchor leading the pack, up 36%, trading at 4.7 cents, followed by Hobby Token, up about 18%, trading at $5.24, followed by Ethereum Classic, up 7%, trading at $41.48. And checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of green and nice gains for the alts. You got Celsius up 96%, Anchor up about 47%, and Hex up 23.5%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated a 42 out of 100 in fear. Yesterday a 41, last week a 31, and last month a 15 in extreme fear. But all right, now let's break down our next story of the day. One crypto exchange former CEO expects the second largest asset by market cap to rally once it completes its major network upgrade. That's right, in a series of tweets, BitMEX co-founder Arthur Hayes explains that Ethereum finds itself in a curious situation called backwardation, where the asset spot price is higher than what it's trading for in the futures market. Hayes believes that this discrepancy is due to the trader's apprehension prior to ETH's upcoming switch to a proof-of-stake consensus mechanism that's scheduled for mid-September. Quoting Arthur Hayes here, "The curve is in backwardation, that is futures spot until January 2023. My guess is because traders are hedging out ETH exposure pre-merge, just in case," which you can see here in this chart. And Hayes speculates on what might happen should the Ethereum upgrade fail by saying the following: if the marginal pressure is on the sell side, then the market makers are long futures and must short sell spot to hedge themselves. This adds downward price pressure to the cash or spot market. And conversely, if the switch to ETH 2.0 goes smoothly, Hayes says two possibilities might play out, as he shares here. But what happens if the merge is successful and hedgers cover their shorts so they're not net long ETH again? And what if speculators who believe in a triple halving YOLO into leveraged long positions? Now the pressure is on the buy side, and market makers are short futures and must go long spot, a reversal of their position in pre-merge. Hayes concludes by noting that the subsequent positive feedback loop would demonstrate to Ethereum advocates that the project is on an upswing. As he shares here, if you believe the merge is going to succeed, then this is yet another positive structural reason why ETH could gap higher into the end of the year. Now, Ethereum's highly anticipated update will enable the mainnet to merge with its beacon chain, which already runs a proof-of-stake system. ETH 2.0 aims to address the network scalability issues by setting the stage for future upgrades. Now, interesting fact, back in March, Hayes and fellow BitMEX executive pleaded guilty to violating the Bank Secrecy Act by willfully failing to establish anti-money laundering protocols. A judge later sentenced Hayes to 6 months of home detention and 2 years of probation, and the former CEO also agreed to pay a fine of $10 million. And before I break down next story of the day, BlackRock announces the launch of a new private spot Bitcoin trust, as well as, according to Invest Answers, BlackRock's entry into Bitcoin could shoot its price up to $773,000. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, all you need to do is make sure you subscribe to the channel, Will Smith, that like button, and drop a comment below, and a random comment will be selected as the winner in tomorrow's episode. But all right, now let's break down our next story of the day, which many are calling the biggest story of the year. According to a blog post published on Thursday, BlackRock, the world's largest asset manager, overseeing over $10 trillion in total assets, has launched a new private spot Bitcoin trust. The funds is only available to U.S. institutional investors and seeks to track the performance of the king crypto, less the expenses and liabilities of the trust. In explaining the decision, BlackRock shared the following: despite the steep downturn in the digital asset market, we're still seeing substantial interest from some institutional clients in how to efficiently and cost-effectively access these assets using our technology and product capabilities. Bitcoin is the oldest, largest, and most liquid digital asset, and is currently our client's primary subject of interest within the digital asset space. Private investment trusts that do not solicit investments from retail investors do not need to register with regulatory authorities in the United States, but others others, such as the Grayscale Bitcoin Trust, can still become publicly traded, though not through the SEC and over-the-counter markets. Excluding stablecoins, Bitcoin maintains close to 50% of the industry's market cap, currently 40% at the time of this recording. And with regard to blockchain's energy use, BlackRock said it encouraged by organizations such as RMI and EnergyWeb, which are developing programs to bring greater transparency to sustainable energy utilization and Bitcoin mining. And quoting Barry Silbert of the Grayscale Bitcoin Trust, central banks now have an easy way to invest in Bitcoin with BlackRock. And quoting Coin Bureau, so let me get this straight, BlackRock is allowed to offer its clients spot Bitcoin exposure through a private fund, but the SEC won't approve a spot ETF for retail. I suppose retail investors are too clumsy to make adult decisions, not like those uber smart rich folks. That's right, when spot Bitcoin ETF in the United States, it's long overdue, but we all know the game that the SEC and regulators are playing. It is what it is. But all right, now let's break down our final story of the day and discuss the $773,000 Bitcoin price prediction. According to a popular crypto analyst, a partnership between two financial giants can trigger growth in Bitcoin's value to about $773,000. Here's an analysis of how that can happen. There was a surprise announcement last week from Coinbase. The US-based crypto titan had teamed up with BlackRock, the world's largest asset manager, in an effort to bring crypto trading to wealthy clients around the world. And the host of the YouTube channel Invest Answers has revealed that the partnership could potentially boost Bitcoin's market cap by $1 billion at the very least. He believes that if BlackRock invests just 0.5% of its assets into Bitcoin and uses his multiplier of 21x, then it will increase the market cap by over $1 trillion, which will mean that Bitcoin will gain $75,000 in market value, taking the price on up to $98,000 per BTC. And from today's price, that's a return on investment of 326%. The possibility of achieving this goal is very, very real, he says. And taking this into account, if they allocate just 1% into Bitcoin, which is naturally going to take some time for them to get there, that would add approximately $2.1 trillion to the value of the market cap, $150,000 to the price. That would take the Bitcoin price to $173,000, which would be a 652% increase. And there's also been a lot of talk about adding 5%, which Dan Tapiero, the CEO of 10T Holdings, says he believes that is much too aggressive, but there is a possibility, perhaps over a period of time, maybe within 3 to 5 years, that this might become a reality. It is very likely the Bitcoin's price will reach $773,000 in the next 3 to 5 years pretty easily. And during his analysis of the crypto market, the crypto strategist was inspired by comments from 10T Holdings CEO Dan Tapiero. He believes that the deal between BlackRock and Coinbase, which is being closely monitored by the prominent macro investor, can propel Bitcoin to levels above $250,000 per coin. Now, BlackRock may have one of the best macro opportunities of all, according to Invest Answers. If it takes the lead in facilitating the Bitcoin adoption, BlackRock assets would be worth $500 billion if they shifted 5%, which is more than the value of Bitcoin. At present, it is becoming interestingly clear that the catalyst for growth of the Bitcoin price post-halving is $250,000 or more. Now, this prediction is based on the assumption that more institutional and large investors will come into the Bitcoin market in the future. And even though there are a lot of positive signs, it's still unclear whether all BlackRock's customers are looking to invest into Bitcoin. And regardless, these kinds of stories that show traditional investment companies embracing Bitcoin and cryptocurrencies are very positive for the whole market, and this may result in long-term green candles in the market over the next few years. So there you have it. What are your thoughts surrounding the $773,000 Bitcoin price prediction in the next 3 to 5 years? Pretty easily. And to watch this entire video entitled Trillions Come into Bitcoin, Are We All Underweight BTC? Check the show notes below the video in the description. Now for the top 3 comments from yesterday's episode. Lawrence Abramoff wrote, "Damn, that BlackRock news is massive. Huge respect for speed of implementation. This and the CPI print being lower than expected. If the Fed holds rates steady, we could possibly see Bitcoin all-time high for Christmas. Yeah, man, absolutely huge. Can't wait for Bitcoin to explode parabolic as a result. Hodl." Our next featured comment comes from Freddie Jones. JV, great show today as always. Glad to hear things are on track for the Ethereum merge. Promising, but still a ways to go. However, when we do get there, I see a great outcome for Ethereum, which is why I am in and hodling. Stay motivated, crypto fam. Peace. Cheers, fam. You got it. Hodl gang. And our third and final featured comment comes from Chris Minka. $2,000 gold, $100,000 Bitcoin, sure, but no way we see $50 barrel oil, more like $200 barrel oil to artificially lower the price of gas. Brandon has released oil from the strategic oil reserves, leave America at a low not seen since 1980. If Brandon replaces this oil, it will be at a higher price. Once they stop subsidy of the price of gas, it will explode higher. $50 a barrel oil ain't happening until a massive crash. So there you have it. And to be featured on tomorrow's episode, drop a comment right down below, and that will automatically qualify you to win $50 in tomorrow's $50 Bitcoin giveaway. And if we could get today's video to 1,000 likes, I'm happy to give away $100 each day versus just $50, because when I win, you win. So make sure to drop a comment, and I look forward to seeing you on tomorrow's episode. Peace.